Hey everyone, welcome to the KE Report, an interview with Matt Badiali as we look ahead to the Trump presidency and what it could mean for critical minerals, cycling to the Inflation Reduction Act as well. Matt is the editor of the New Energy Investor, published under the Mangrove Investor website, which I will post a link in the show notes. Now, Matt, we've talked a lot about critical minerals over the last few years and just how supportive governments are towards critical minerals, or at least how supportive they say they are, that they've set aside large amounts of money. But I feel like the movement of that money, the deployment of that money has been generally slow. And a lot of companies still say, we're applying for these grants. And if they get them, they tend to be small amounts of money. But who knows? They could always build on that. Now, with Trump coming into the presidency in under 2 months now, he has said that he's going to pull back on a lot of this stuff. Trump is looking more to some of the old school energy sources, some of the maybe other type of commodities outside of critical minerals. So, Matt, does that mean that companies, critical mineral companies, looking for some of this free or cheap money from the government, they're going to have a much harder path to it?
I think so, and I think we're going to see an indication right away because one of the platforms that Trump ran on was that he was gonna rescind all the funding for the 2022 climate law, right? Well, the Green New Scam, he called it, right? That's $8.5 billion set aside for tax breaks for EVs, and so you know, up to inauguration day, you can still buy an EV and get the tax break. But after that, it's pretty likely that that's going to go away. And so that alone is going to have some downstream impacts on battery metals, right? If you disincentivize people from buying these cars, you're, it's going to be challenging. And so if you start there, that climate law included a lot of subsidies for, these energy alternatives or these fossil fuel alternatives. So yeah, I think that's going to be really difficult. There was also funding and tax breaks for installing heat pumps and induction stoves and energy efficient appliances. Nobody really paid much attention to it, but the House and Congress did a whole series of meetings on saving the freaking gas stoves. So they, as a party, they're anti these new energy policies. And so I suspect that'll be one of the things that they'll go after immediately.
Yeah, Matt, and in addition to some of the measures they had in the Inflation Reduction Act for the homes, like the heat pumps, they also had put in their electric vehicle chargers. And some of the Republicans were pushing back on that idea that we don't need the EVs. And so I wonder how this ties into some of the infrastructure that was supposed to build out more charging stations that was in there. And the EV, so how does that tie into something like copper? Is that going to hurt copper demand? Is that going to put a crimp on it with more of a focus on just oil and gas and, nat gas for power, but oil for transportation? How does that affect the red metal?
Yeah, it's a good question. One of the things I have to balance in my analyses is the volume of the metal that we actually use for that here, right? Because the other thing he's doing is tariffs. That's the plan. This conversation was to slap tariffs on everything and everyone, and a lot of our copper, it's turned into things elsewhere. We don't take the raw metal and make a whole lot of it here. Certainly not motors and that sort of thing. So yeah, there's going to be a huge tax on finished goods coming in from other countries, all the way up to and including EVs. So I think there will be a chilling effect. On the other hand, if we step away from the US impacts, China is going the other way and they're incentivizing people to buy things. And so China really is the mouth of the world when it comes to this sort of thing. And so we'll have to balance the two. But yeah, in terms of US consumption, my suspicion is that you'll see demand from the US fall because prices are going to go up, whether it's from the loss of tax breaks or the increase in taxes from tariffs.
So, Matt, regarding again the bigger critical minerals sector, look, isn't this just another lesson to not depend on government for funding, because even though they have this money set aside, they weren't giving it out to a whole lot of the companies in these sectors. Apparently, they're looking more at how to recycle some of these critical minerals. But look, we still have these other manufacturers that have provided capital to these companies. Isn't that still one of the key drivers for critical minerals? Is that car manufacturers, OEMs, they need these minerals to build their products. So they're the offtake agreements. They are the ones that can still provide capital.
Yeah, I think that's a good point. I certainly think that, one of the things is that about the US is that these governments change every 4 years. And so if you're reliant on government funding in a situation where the government can change its mind every 4 years, yeah, you can get whipsawed to pieces as a business. So pretty much the long term, it certainly looks like the longer term companies are thinking longer term. I mean, there's a headline in Bloomberg today that said Exxon CEO pushes back on Trump's anti-climate change agenda. That's a headline that I can't even I can't even imagine. But what it shows us is that companies like ExxonMobil are planning, they're looking longer term, and they see a disruption from the incoming administration in a way that's not beneficial to them. So there could be big companies that are also influencing this. We talked about this offline too. I mean, Elon Musk was a huge backer of Donald Trump, and he's an EV maker, so he must be seeing something that he likes. So there's this, the magic 8 ball says it's cloudy, come back tomorrow.
That is a good point with Elon. It's hard, I could see where he would be excited about tariffs on Chinese EVs or Japanese solar panels because it would boost domestic supply. But it seems like if they dismantle some of the Inflation Reduction Act, then it would still be bad for domestic. Some of the credits in there were also for battery company startups or to expand battery plants. I don't know how that helps the U.S. in that area, but there's one area I want to ask you about, Matt, and that is there was some funding in there for nuclear power and for hydrogen, green hydrogen. And we have seen some money. We've even brought companies on our show that have received some of the money for hydrogen as a fuel component. And obviously, nuclear has been in the spotlight with a lot of tech companies in AI. Do you think that Trump's administration would be supportive of domestic business if it can expand our footprint and say hydrogen vehicles, hydrogen power, and or nuclear power here in the U.S.?
Well, I don't know about hydrogen because I haven't seen any comments. And he gets his advice from a pretty broad series of inputs. But nuclear, I have seen, and the Biden White House just put out a plan to triple nuclear power by 2050, and Trump actually supports nuclear power. So I think nuclear may end up walking away from this administration as the big winner, which, it's ironic because it's still carbon free, but it really is a source of power that I can get behind. So, the uranium commodity looks good, if not great, going into the next administration. And if the U.S., really puts its shoulder to the wheel, this will happen relatively quickly. I mean, 2050 is what, 25 years? So that's a lot of new power plants to build in 25 years. So that might be the big infrastructure winner going forward.
Well, and again, we've seen tech companies provide some potentially very significant offtake agreements, purchase agreements for that energy, and we have seen the sector respond too. So hopefully that outlook continues. But Matt, look, this is a weird time for I think all investors because everybody's looking ahead to when Trump takes office and just how much power he has with essentially the Republicans sweeping that election, but everybody doesn't really know what's going to come out of that presidency, right? So, what do you, I think, need to see early on in that presidency? What sort of market reactions are you looking for to either confirm or make you alter your outlook for critical minerals broadly in any of these individual critical mineral sectors?
Yeah, there's a couple things that I'm going to keep an eye on. The first thing is, in the last Trump administration, his plan was always to get rid of the Obamacare healthcare plan. And he was never quite able to do it, whether that was because of the people in his own administration or the pushback from the Congress. He just wasn't able to do it. So what I'll be looking for is what happens in probably the first quarter, what he begins to take away from the alternative energy space and how his plans impact the US. Does he go ahead, like you said, with day one of putting tariffs on every imported good? That'll be something to watch, because that's going to be a massive disincentive to all investment, right? If you're going to raise taxes across the board like that, there's going to be a disincentive. And so I'm looking at a potential pullback across the board, not just in commodities, not just in energy, metals, that sort of thing. The other thing I'll be looking for in his next term is the Republicans have put forward an agenda to fire workers. It's called Project 2025. So you have all these civil servants that are supposed to be nonpartisan, and the Republicans want to get rid of all the nonpartisans and put in their people. And if they're able to do that, it will really slow whatever changes the next administration wants to make. So if a new administration comes in and they want to go back to a kind of a zero carbon plan and incentivize EVs and that sort of thing, they're going to be fighting an entrenched infrastructure that wants to continue to push the current agenda. So we'll see what happens. My overall takeaway, short answer, is I got one foot on the brake right now in terms of investing.
Well, Matt, just one more thing, just looping back around to the Exxon article you mentioned where they're pushing back on Trump about his green initiatives, which I agree is a shocking title. I don't think anybody was expecting to see. But we've also talked on the show with you about how Exxon is investing big into direct lithium extraction and how they believe in the Smackover formation, that they can actually supply, I think, up to 1 million to 1.5 million EV batteries using direct lithium extraction. If there's a halt to the interest in EVs or the infrastructure for them, could that be where Exxon is upset? Because a lot of these big oil companies have been investing in the green changes, and there's even companies investing in carbon credits. I mean, do you think a lot of that change that's already been sweeping through the energy transition change is now causing them to have a moment of reflection, like, wow, maybe we're putting too much money into the Green New Deal, and maybe we should have been more traditional energy?
Yeah, here's what I think. I think you put your finger right on it when you said that these oil companies have been investing in some of these new technologies. And I don't think they're doing it just because of the Inflation Reduction Act. I think that's the direction the world will continue to go, not just the United States, but the world is moving in that direction. Carbon capture, clean hydrogen, sustainable aviation fuels. These are things that are right in the wheelhouse of these giant chemical companies. When you think of ExxonMobil, it's not correct to just think of oil wells. These are incredibly complicated chemical companies, and they start with these base molecules that come from oil, and they turn them into all sorts of things. So if anyone can figure out a way to generate hydrogen cheap and clean, it's going to be one of these giant chemical companies like Exxon. And when you're trying to make aviation fuel that is sustainable, these guys are, they're halfway around the race course ahead of everyone else who's coming into this business as a startup. So of course, they've already invested a lot of this money, and this is going to be it has the potential to be, I shouldn't say it's going to be. This has the potential to be an incredibly disruptive presidency for the energy companies, for the oil industry. Even though that one of the mottos was drill, baby, drill. The fact of the matter is that the U.S. is producing more oil today than they've ever produced, and the price is going down. The answer to low prices isn't drill, baby, drill. And so I think that's part of what the energy, especially what Exxon's looking at. It's like, man, if we keep producing oil, we're gonna drive the price down, and that's a problem.
Yeah, that's such a good point. That's the thing, right? If you produce a lot more of it, then you would think prices go down. Who knows what OPEC's response would be to that, but that could really generate kind of an oil war, a race to the bottom to see who can survive at those prices. But again, with these critical minerals here, Matt, Yes, the government might pull back on some of their funding, but these are still sectors that other governments are focused on. And quite frankly, that it does seem like a lot of companies are building out new technology for, figuring out how it's all going to work. So while Trump might slow it down in the US, couldn't that also be opportunity for some investors where if a company is advancing whatever their technology might be, whatever their asset might be, that if it's a good one, well, then there's less options out there and there will still be money available to those companies.
No, absolutely. Absolutely. And look, if I were a company focused on green energy and I'm in Silicon Valley, I'm leaving. I'm going to Europe. I'm going to Japan. I'm going somewhere else. I'm taking my tech with me and I'm getting the heck out of Dodge because, it'll be an uphill battle. I'd rather have a tailwind going downhill than a headwind going uphill. And that's what you're going to have in the US. So yeah, this is the potentially going to change the locus of technology away from the US into other countries. And so we're going to be behind the race. Hell, we might be out of the race. We'll see.
We will see. And again, we'll see what Trump does when he's in power. But hey, maybe the critical minerals space, which in all fairness has been losing some momentum even before this election, maybe lose a little bit more momentum, or maybe without everyone thinking so positively about government funding, maybe some of these minerals start to get valued a little bit better. Who knows? Some of them are truly down in the dumps prices wise.
Yeah.
All something for us to follow along with. But again, we're kind of in this limbo until Trump takes office to see what his policies are and what he prioritizes. Again, Matt Badiali, editor of the New Energy Investor, published under the Mangrove Investor website, which will be linked in the show notes. Matt, thanks as always for your time today.
Thanks for having me.